Hey everyone, welcome back to our course Financial Literacy from Scratch. In the previous video, we took a detailed look at inflation and how it affects your money. If you haven't seen those episodes yet, the link will pop up in the top corner, or you can find it in the description below. Today, we're diving into a topic that can feel complicated and intimidating, but is absolutely essential for your financial foundation: taxes. Now, before you groan and think, "Ugh, taxes are boring," let me stop you right there. This video isn't about guilt, shame, or trying to make you feel bad about paying taxes. This is about clarity, control, and understanding. Because here's the truth: knowing how taxes work empowers you to make smarter decisions with your money, see where your hard-earned income goes, and avoid common mistakes that cost you later. In this video, you'll discover the basics of income tax, what it really means for your paycheck, how the progressive tax system works in simple terms, the difference between gross income and net income, so you know exactly what you keep, the most common beginner misunderstandings about taxes, and how to avoid them. So grab a notebook, because this one might just change the way you see your paycheck forever. Part 1. Income tax basics. Let's start with a question. What is income tax anyway? At its core, income tax is a portion of your earnings that goes to the government. It helps fund public services like schools, roads, healthcare, and emergency services. Most people only see their paycheck after taxes and never stop to consider how much of their money goes to these services. But knowing where your money really goes is the first step toward financial awareness. Think of taxes as a shared contribution, but also as a number you can understand and plan for. Part 2. The progressive tax system explained. Here's where it gets interesting. Most countries, including the United States, use a progressive tax system. This means that the more you earn, the higher the tax rate applied to the top portion of your income. For example, the first portion of your income might be taxed at 10%, the next portion at 12%, and so on. Your total tax isn't a flat percentage, it increases gradually with your earnings. It's easy to misunderstand this and think, if I make more money, all of it is taxed at the higher rate. That's not how it works. Only the income above each threshold is taxed at the higher rate. Understanding this prevents unnecessary stress when you get a raise. Part 3. Gross versus net income. Now let's talk about gross income versus net income. Gross income is the total amount you earn before taxes or deductions. Net income, sometimes called take-home pay, is what you actually get in your pocket after taxes and other deductions, like Social Security or retirement contributions. Many beginners make the mistake of looking at their gross income and assuming that's what they'll actually take home. But knowing your net income helps you budget realistically, save smartly, and plan for taxes in advance. Part 4. Common beginner misunderstandings. Finally, let's clear up a few common misconceptions. I don't make enough to worry about taxes. Even lower income earners pay taxes, and understanding deductions or credits can save you money. All deductions are complicated. Most deductions are straightforward if you know where to look, like retirement contributions, education credits, or medical expenses. I don't need to check my paycheck, it's automatic. Mistakes happen. Checking your paycheck ensures you're not overpaying or missing benefits. Part 5. Why taxes are automatically withheld. You might wonder why taxes are often taken from your paycheck automatically before you even receive it. This system is called tax withholding. Employers estimate how much tax you will owe during the year and send that portion directly to the government. Instead of waiting until the end of the year for people to pay their taxes all at once, the system spreads those payments throughout the year. This helps prevent people from facing one very large tax bill later. However, these estimates are not always perfectly accurate. Sometimes too much tax is withheld, which results in a tax refund when you file your tax return. Other times, too little tax is withheld, which means you may owe additional taxes. Understanding withholding helps you avoid surprises and gives you more control over how your income is managed throughout the year. Part 6. Tax returns. How to file. At the end of each tax year, most taxpayers are required to file a tax return. A tax return is a formal report to the government that shows how much income you earned, how much tax was withheld, and whether you owe additional tax or are due a refund. Even if your taxes were withheld accurately throughout the year, filing a return is necessary to claim any deductions or credits you are eligible for. In the United States, tax returns are typically due by April 15th for the previous calendar year. Failing to file a return can result in penalties, interest, and in extreme cases, legal consequences. Filing a return is also how you reconcile your income and withholding, making sure you paid the correct amount of tax. For beginners, this process may seem intimidating, but it is straightforward with the right forms and guidance. Most people use standard forms like the 1040, and additional schedules are used if they claim deductions or credits. Part 7. Tax deductions versus tax credits. Now let's take a closer look at two terms that often confuse beginners: tax deductions and tax credits. Tax deductions reduce your taxable income, not the tax itself. For example, if you earn $50,000 and claim a $5,000 deduction, the government calculates your taxes as if you earned $45,000. Common deductions include retirement contributions, educational expenses, and charitable donations. It's important to understand that deductions are not applied automatically. You need to claim them on your tax return or submit the relevant forms through your employer to ensure they are applied. Tax credits, on the other hand, reduce the actual amount of tax you owe. For example, if your calculated tax is $2,000 and you qualify for a $500 credit, your final tax bill becomes $1,500. Some credits can even result in a refund if the amount of the credit exceeds the tax you owe. However, not everyone qualifies for every credit. Eligibility depends on factors such as income, filing status, and specific expenses. In short, deductions lower your taxable income, while credits lower your tax bill directly. Understanding the difference helps you legally reduce your tax liability and make smarter financial decisions. Part 8. Why understanding taxes changes how you see income. Once you begin to understand taxes, something interesting happens. You stop thinking only about how much money you earn. Instead, you start thinking about how much money you actually keep after taxes, deductions, and credits. Two jobs might offer the same salary on paper, but after taxes and other adjustments, your take-home pay could be very different. This is why financially literate people evaluate income in after-tax terms, not just the headline salary number. This shift in perspective changes how you make decisions about raises, bonuses, and job offers. It also helps you better plan your budget, savings, and spending. Understanding taxes doesn't just help you file paperwork. It changes how you view income itself and gives you more control over your financial life. Part 9. Recap and empowerment. So here's the takeaway. Taxes aren't just an unavoidable chore. They're a financial system you can understand and navigate. Knowing the difference between gross and net income, understanding how the progressive system works, being aware of tax deductions and credits, and recognizing why withholding and filing exist gives you more control over your money. Remember, financial literacy isn't about memorizing numbers. It's about understanding the forces shaping your income and planning wisely. Take a moment to look at your latest paycheck and tax forms. Can you identify your gross income, net income, withholding, and any deductions or credits? If not, reviewing these documents carefully is the first step toward mastering your finances. If this video helped you understand taxes a little better, make sure to like, subscribe, and share it with someone who's nervous about their paycheck. And we'll keep building your financial foundation in our Financial Literacy from Scratch series. Until then, stay curious, stay aware, and see where your money really goes. See you in the next video.